and welcome to the Global Viewer on this Wednesday. I'm Andrew Gagan. Good to have you with us here at ausbiz. So let's check what happened overnight. Global stocks slightly weaker as higher US bond yields weighed on risk assets, while gold hit another record. Stocks on Wall Street reversed course late in the session to leave the major indices in mixed territory. And the rate-sensitive mega-cap stocks slipped, with Apple and Nvidia finishing lower. But overall, the tech sector was up. Microsoft, the best performer there. In earnings results, Verizon fell as the telecom giant missed estimates for third quarter revenue. 3M slipped despite raising the low end of its full-year adjusted profit forecast. General Motors shares accelerated after the car maker's third quarter beat Wall Street estimates. Lockheed Martin dipped despite lifting its annual profit and sales forecast because the company's F-35 fighter jet program faced payment headwinds from government contracting. And GE Aerospace shares slumped despite raising its profit forecast as supply constraints impact its revenue. And Texas Instruments released its results after the bell, forecasting fourth quarter revenue below estimates as customers hold back on orders. Well, US Treasury yields have hit a 3-month high as expectations for a less dovish Federal Reserve dampens demand for US government debt. And shifting momentum towards a Donald Trump presidency has also weighed on bonds, with his policy expected to reignite inflation. The 10-year yield rising to 4.2%, the 2-year at 4.03. Meanwhile, the Philly Fed's non-manufacturing survey rose more than expected, while the Richmond Fed's manufacturing survey also rose but remains in contraction. And in the latest Fed speak, San Francisco Fed President Mary Daly has said, "So far, I haven't seen any information that would suggest we wouldn't continue to reduce the interest rate. This is a very tight interest rate for an economy that's already on a path to 2% inflation. I don't want to see labour market go further." And the Kansas City Fed President Jeffrey Schmidt has said he'd like to avoid outsized moves, especially given uncertainty over the eventual destination of policy. Well, the US dollar has risen to a 2.5-month high on expectations the Fed will temper its interest rate easing, while investors are positioned ahead of a tight US presidential election. And the Aussie is at 66.9 US cents. In terms of commodities, oil prices have risen for the second consecutive session as traders focus on signs of improving demand from China. Brent crude futures up around 2.5% at $76 a barrel. Copper's up around 0.5%. Iron ore down 1% at $100 a tonne. And gold has climbed to another record, rising 1% to $2,746 an ounce. Bitcoin, meantime, that has eased. It's trading around $67,500 US dollars. All right, let's get across what is moving markets now. John Blank joining us from Zacks Investment Research. John, terrific to catch up with you once again. Just taking a look at what we're seeing there, and I was mentioning those bond yields. Why are they continuing to rise? I mean, obviously, markets now pricing in perhaps a less aggressive Fed in terms of monetary easing. But what about the election? Is that now playing into investors' thoughts?
Well, Andrew, I think, first off, let's just address the 10-year Treasury yield at 4.21% today. That's back to late July, early August levels. So basically, we're reeling back in 2 months of pessimism about the Fed not being able to cut fast enough or slowing this economy down. Now we got a third quarter GDP growth rate that's 3.4% of GDP now. And we get a report on October the 30th next week on Thursday, which will probably be the last GDP report of significance, which is the third quarter report, and it's going to line up in that 3 area. So that's a very hot economy. So what's happened here is a very aggressive CME Fed futures trader, which is mimicking the bond market generally, is now reeling back to the dot plots the Fed put out in September. So now everything is in alignment. It's not really like there's no cutting coming. It's just that there's not aggressive cutting coming. And it's going to be the Fed moving 25 basis points the day after the election, and then another 25 basis points in December, which is consensus now. 75%, 67% is what the likelihood is.
Well, just in terms of the election, what impact is that having with what's obviously very, very tight in terms of the polling, but that Trump trade appears to be back?
No, I don't think so, Andrew. I actually don't agree with that. I think what's happening here is the same thing. We're just seeing a pullback to the Fed consensus. What you do see from the election is, we moved from a 12 VIX to an 18 VIX, and we're hovering a little higher. So there's a lot of movement in the stock market itself now in front of the election. There's kind of nervousness. But you have to understand that as we approach the election, there are more and more right-wing polling outfits throwing up more and more polls into polling averages and making it appear like it's getting tighter. That is actually very cleanly happening, and there's no way to get a read on what actually is happening unless you pay attention to early voting, which they've also rigged. You can't pay attention to that either. So what I would tell you is you got to know the source of the polling, and you got to distill it down to the A and A plus polling groups, and then decide what's happening from that. And also pay attention to early polling that's comprehensive and not, sourced to some group that's trying to push a narrative. But I think, in truth, Andrew, it's not that close. And that's what I picked up. And that as it turns out that it's not getting that close, the poll rigging is going up.
Well, that's disturbing in itself, isn't it? And hopefully there is a clean result come election day. John, let's move to stocks. What we're seeing on Wall Street, maintaining, sort of near those record highs, of course, but also we're in the midst of earnings season. Importantly, of course, we're getting some big results from mega cap tech. What are your expectations?
Well, I think, we're going to get probably a poor report out of Tesla here to start things off after the market closes on Wednesday this week. So when we get Tesla out of the way, I think the other six are going to be great. When we get a good report out on Netflix, we'll probably get other good reports. I mean, at the end of the day, Andrew, we have no growth in earnings without these 7 companies. So if you think that, we get an S&P 500 at 23% year to date, a Nasdaq at 23% year to date, in many ways, that's mimicking the growth rates of these big tech stocks, the really big ones. So, and if you want to spin it, you could say, what if an election comes? What if Paris does win? What if we get some monopoly breaks up of these companies? Does that affect the growth rate? And at this point in time, the market doesn't seem to care about that. So I think, you're looking at, another thing that's, kind of disjoint, which is how can we get, economy growing or slowing down and stocks growing at 23%? We can because it's a market weight index, Andrew. These big companies are floating it up and up and up.
John, let's then come to your picks. You bring us 3 stocks. The first one, now there's a focus on Chinese stocks at the moment, particularly given that market has moved significantly in the wake of stimulus we've seen. Alibaba, it is one of the world's biggest e-commerce marketplaces there. What are you seeing?
Yeah, Andrew, I mean, let's think about this. It goes from 130 billion in sales in 2023 to 140 billion in sales to 150 billion. So this company's mini gears can drive $10 billion worth of sales guaranteed. So now you've got this stock in this complete, holding pattern for 3.5 years on that chart. And that's taking us to a forward PE of 11. So among the 3 stocks, this is a value stock and a growth stock. So you can see those estimate revisions for 26 and 25 have turned up, particularly 26. And now you're looking at almost $10 a share on that stock. So you got to like this stock here. The only question is, of course, is this upgrade to the revisions the business strength, or is it just trying to mimic an early call on the stimulus? And I think probably more the latter than the former. But as people begin to believe in this company, again, there's no way that it's going to stay at 11 PE. So, all of Chinese stocks are going to watch the performance of Alibaba. That's why we're going to talk about it. That's why it's up. But at the end of the day, get 4% upgrade in revisions for 25 and 26. And that is significant in the last 30 days. And I'm sure it's the stimulus. But at the end of the day, if it starts a lot of more gears turning inside that company on strategy and starts a lot more consumption inside that country, that's all good news.
John, let's stay with Chinese stocks. BYD, known certainly this side of the world for its EVs. What are you seeing in this one?
Andrew, this is a fascinating story here. I looked into their headline sedan, which would compete with the Model 3 Tesla. That's called the Han, the BYD Han. So the BYD Han was introduced in 2020. They came up with basically the Model 4 in September of 2024, just a month ago. And now a hybrid Han is $23,000. A fully electric Han is $25,000. So while Musk is sitting around, running around the United States, rigging polls and trying to win an election, the Chinese competitor that he's faced with is already in the market with a $25,000 car. Furthermore, when you upgrade to, their automated, driving capabilities, they're using LiDAR, which he refuses to use. So again, you've got Waymo in all these markets. Los Angeles, I've seen and heard, is now Waymo's all over the place. So now you've got the automated taxi driving business passing in the rear mirror, and BYD has got a $25,000 Han sedan that's very nice, by the way. And that's also getting the upgrade revision. So I think when you get to the BYD story, what you get is this is the year where Chinese manufacturing products like electric cars are going to go the way Japan went, where we suddenly realized they weren't just cheap cars with cheap things. They were really nice. So that's what I think you got to pick with BYD.
But John, just briefly, what about those tariffs, though, we're seeing on Chinese EVs in both the US and Europe?
Yeah, Andrew, what I think that's going to do is lead, post the election, of course, post the inauguration, almost certainly. But at some point in time, BYD and these groups and the battery groups like CATL, they have to license their technology to a U.S. group because they're not going to get around these tariffs. But they can sit down and negotiate with a GM, a Ford, or some other group, Stellantis maybe, with an in-house manufacturing in the United States, even a European maker in the United States that could license this stuff and start producing these cars. So what I think is going to happen here is joint ventures. They have to look at this and say, look, we can't sit around with a $25,000 car and not do something. And then what you can do is do a JV.
Very quickly, almost out of time. John, your third stock, Siemens. What are you seeing here?
Yeah, Andrew, Siemens, of course, the big news here is there's a 0% growth rate in Germany. So why are we talking about a German industrial stock? Because this is the biggest name in industrial automation, and they are super multinational. So don't conflate the zero growth rate in the German economy with the names of stocks like this. You can look at this stock right here. Of the three we're looking at today, BABA, BYD, and Siemens, this actually is the chart that looks best. The momentum is on, the earnings growth is consistent, and they have so many drivers. And industrial automation is really one of the sweet spots with AI and all the different things that are coming along with software. So gotta love this name, even though it's German. And because it's German, it's actually cheaper than probably should be trading at.
John, terrific stuff, and we'll beware of that election polling. Thanks so much for joining us from Zacks Investment Research.
You bet, Andrew.
All right, quick check of where we're likely to begin. After substantial falls yesterday, we're looking for a positive start today. SPY futures up close to 0.3%. Stay with us because the open is just around the corner.